Welcome back. There's been quite a recovery in the market. We have moved into the green as well, 21,420 on the index right now. So from the lows of the day, it's an 80-point recovery. Like we were mentioning, this is firmly a buy on dips market. Every, dip that you are getting is getting bought into. Same thing that we saw play out yesterday as well. Banks also completely at the flat line. So there's been a good move over there as well. The private banks are pretty much almost in the green right now, but even the PSU banks have recovered a fair deal from the lows of the day. But let's get in a conversation on the market on where things could really be headed from here on. We have Varun Goel joining us from Nippon India AIF to take some questions. Varun, always a pleasure having you on this show. Take us through how you're looking at things. We saw that super rally after the Fed pivot came through, but the question is how much of this is in the price and how much more can we run up when we've already run up like this?
Good morning, Pavithra. Thanks for having me on the show. I think if you look at the valuations in the markets today, if you look at 950 rupees earnings for Nifty for FY24, you add 12% growth for next year. So I think we are trading almost 20 times FY25 earnings, which is, I would think 10 to 15% more expensive than the historical averages. So definitely there is time to be a little more cautious. From a sectoral perspective, we continue to be quite positive on the banking space. I think select pockets of value in both private and public sector banking space. On the correction, of 5, 10, 15% correction, we would look to add more to real estate, IT, pharma, and when media. These are the sectors that we would like to add from a 3 to 4 year perspective.
IT, real estate, pharma, and media. Only if you get a 10 to 15% correction in these stocks.
So morning, Reema. So definitely there is pockets of value in the market. One really has to pick and choose. Our view is that there are certain themes which are slightly longer term in nature. If we were to look at the 5 to 10 year trajectory of the Indian economy, these are the sectors and the themes which we believe are doing quite well and are also not very expensive. So wherever we get opportunity, in the names of the themes that I mentioned, we are looking to add.
Okay, but broadly you're cautious of the market. So in the last 2 months, November and December, since when we've seen this monster rally take place, have you been booking profits? If yes, which are the spaces where you've looked to take some money off the table?
Yeah, so we, largely the portfolios remain the same, although we have definitely moved out some money from the capital goods and the PSU space and moved to some of these historically more defensive sectors like IT, pharma, and media. So that's some bit of readjustment, realignment in the portfolio that I've been doing, but largely the portfolio continues to be what it was.
Varun, the entire PSU space still seems to be a favorite, right? Even after this big run-up that we've got, the PSU companies, even the PSU banks, where Abhishek just tell us a while ago how he was reading out a Motilal note which says that we're set for a re-rating 2.0. Do you think that after this big run-up, there is much more to go and valuations are still compelling here? I mean, it is better than a lot of the other sectors in the market.
Yeah, I think banking still remains the most attractively valued sector of the market, and no doubt PSU banks, considering the improvement that we are seeing in the fundamental numbers, there is a lot of value. I think a lot of PSU banks are going to deliver 1% ROA, 13, 14, 15% ROE, and it's been almost 15 years since they delivered that kind of performance, and it looks like this performance will sustain for some more time. If you look at the broader credit growth, after the first year after 2014, we have seen double-digit credit growth in FY23, and looks like this year also, FY24, and then maybe in sometime in 25 also we will see 12, 13, 14% credit growth. So in this kind of environment, where provisions are low, NPAs are low, and when credit growth is positive, I think banking as a whole should do well, and definitely PSU banks, select PSU banks should definitely deliver good returns over a longer period of time.
And what about the other PSU stocks, the power, defense, railways, which have been on fire lately?
I think one needs to be a little more careful in some of those themes. I think, while the ROEs are getting better, order inflow visibility is definitely there as far as railway and defense stocks are concerned. But at the end of the day, we need to remember that these are EPC companies and therefore need to be trading at those kind of valuations. So we have definitely taken some money off the table in some of those sectors and looking to invest in the more reasonable parts of the market.
What about new age tech companies? How do you view the prospects for 2024?
Yeah, I think business models are evolving. Some companies are now focusing a lot more on profitability than just on top line or user base. But I would still wait to have more confirmation of the long-term proving of the business models and profitability. Our sense is one big variable in these companies is the marketing spend. If you reduce the marketing spend, the profitability comes in. If you increase the marketing spend, again, the profitability goes for a toss. So let's see, if the profitability can hold even with increase in marketing spend. So that's something you would like to see from a slightly
So
longer
as of now, Varun, no investments in any of the new age tech companies. They don't meet your criteria.
No, very little, and we continue to be cautious investors. Yes.
Okay, there have also been a slew of these new listings, right, which has come through and listing at crazy premiums. Have you found any of those very interesting, or places that you would like to look at?
Well, I think stationery as a space, is definitely interesting. So a lot of, focus now on children's drawing instruments, coloring books, a lot of things that children buy, be it water bottles, be it pencil boxes, compass boxes. This is a category, which is seeing a very rapid shift from unorganized to organized. And this is something which will sustain over a period of time. I think the amount of money that parents these days spend on children, whether it's school bags and some of these stationery items, is increasing disproportionately. And therefore, we believe this category can deliver a healthy double-digit earnings growth for a long period of time. And as such, we would remain those companies which have good corporate governance run by good, clean, ethical management. That's something that is an area of interest for us.
Okay, that is the word that we've been getting from all of my co-anchors as well when the DOMS IPO is coming through, that this is a brand which has been used by all of their kids. So it's good to have you on the show, Varun. Thanks for taking the time and speaking to us about these individual pockets of the markets and where things could be headed. We are going to get into a short break on that note, but there's lots more market action coming up in just a bit. I want to